Hello, welcome to Accounting Hub. I am George Scarpin, accounting professor and PhD in accounting. Today, let's talk about journal entries for a manufacturer's job cost system. So, first of all, we are talking only about job costing system, not about process costing. This is another video, okay? So remember, when we are talking about job costing, we have three main costs: direct materials, direct labor, and manufacturing overhead. Direct materials usually is the raw materials. And then remember the flow of costing. We start with our inventories and then we go to the cost of goods sold. When we are talking about manufacturing costs, we have three inventories because we have three costs. So we have raw materials inventory or direct materials inventory, and then we have work in process inventory. When we combine the raw materials with direct labor and manufacturing overhead, when we finish it, we have the finished goods inventory, and then we have the cost of goods sold. So assume that Scarping Corporation ordered and received $90,000 of raw materials during December. Debit, raw materials inventory, credit, accounts payable, or cash. Exactly the same as merchandise companies. We are purchasing stuffs. So we are increasing our inventory. And then assume that we used $112,000 of direct raw materials during December. Wow, we purchased only 90. Remember, we have beginning inventories. So we debit working process inventory and credit raw materials inventory. Here, we are moving from raw materials to working process. And then let's indirect materials. Same. However, indirect materials, it is manufacturing overhead. So we are debiting manufacturing overhead, we are crediting raw materials inventory. So when we use direct materials, it is work in process inventory. When we use indirect materials, it is indirect, so it is manufacturing overhead. Use of direct labor. Assume that Scarping Corporation incurred $30,000 of direct labor. Just like raw materials, we debit working process inventory and then we credit. We don't have direct labor inventory, so we credit wage payable or cash. Use of indirect labor, exactly the same as indirect materials. Debit manufacturing overhead, credit wage payable. Incurring other manufacturing overhead costs. Plant utilities, depreciation, insurance, property taxes. We debit all of these as manufacturing overhead. Here, if we are talking about merchandise companies, everything should be expensed. But here we are talking about manufacturing companies. So we need to inventory these items and then we have the manufacturing overhead. And then we credit accounts payable for electric bill, accumulated depreciation for depreciation, prepaid insurance for insurance, and prepaid and property tax payable for taxes. Allocated. So let's allocate uh, these manufacturing overhead to dots. Now we are moving manufacturing overhead to working process. So we have job 101, 8,000, job 102, 16,000. So we have 24 working process and manufacturing overheads. And we complete it. Assume that job 101 has a total cost of 58 and job 102 had a total cost of 108. Both were completed, so we have no working process inventory. So, okay, we are we finish it. So we are moving from work in process inventory to finished goods inventory 166. That is the combination of both. We are selling them. Sales. exactly the same as a manufacturer company. When we sell it, we sell 40 product X from job 101 and 60 product Z from job 102. So we have here, uh, we combine, so 40 product X times 1,425, the selling price, plus 60 product Z times 2,500, the selling price, so 207. Debit accounts receivable or cash, credit sales revenue, and then finally we have the cost of goods sold. So cost of goods sold, then finished good inventory. Exactly the same here, the sales, exactly the same as a manufacturing company. Okay, guys, that's it. Very easy journal entries. So thank you. If you have questions, comments, leave it on this video or email me at jscarping@gmail.com. Don't forget, subscribe our channel and like our video. Have a very nice day.